I'm David Brancaccio in Los Angeles. Last week, the U.S.-EU trade deal was painted with a broad brush, but now we're getting some finer detail with taxes on most European imports capped at 15%. Marketplace's Henry Epp reports.
What's new is that 15% cap will apply to pharmaceuticals and semiconductors, according to an EU official quoted in Reuters. The U.S. is still investigating imports of both prescription drugs and computer chips from across the globe. The result of that probe could lead the Trump administration to impose higher taxes on imports of those items. But for drugs and chips made in the EU, that tax won't be any higher than 15%. Under the trade framework, European cars and car parts will also face a 15% tariff. That's down from the current 27.5% charge, which the Trump administration imposed earlier this year. Major exceptions to the cap for now are European steel and aluminum. Meanwhile, the European Commission announced Monday that it will delay a set of retaliatory tariffs on U.S. goods for 6 months to give the sides time to finalize a deal. Those measures had been set to take effect on Thursday. European officials have said they're working with the U.S. to release a joint statement outlining the trade agreement. I'm Henry Epp for Marketplace.
Dow futures are a little changed at the moment. S&P and NASDAQ futures are both up about 0.3%. Amazon stock is down more than 9% in the 2 trading days that followed its quarterly results. Profits beat expectations, but there were hints of slower growth ahead for Amazon's remote computing for hire business. Amazon is putting more money into its cloud computing business and more into developing artificial intelligence for all its products. Marketplace's Kristen Schwab has more.
When you think of Amazon, what first comes to mind?
I will think of Amazon as a tech company.
Amazon is a conglomerate now.
They're an ecosystem, I guess is probably the best way to describe it.
That's Santiago Galino, Sucharita Kadali, and Aaron Cheris. And their answers are a far cry from Amazon's origins as a bookseller, or even what it is most known for today, Amazon Prime. Aaron Cheris runs e-commerce at Bain & Company.
They are, yes, a retailer, yes, a tech company, yes, a logistics company, yes, a advertising business, and also, yes, an entertainment company.
Amazon has its cloud services through AWS. It has its own warehousing and trucking. And it makes media, including a new James Bond movie. Cheris says these parts of Amazon are becoming more essential than Amazon.com itself. The margins on Amazon's cloud business, which has clients like Toyota and Airbnb, are something like 40%. Advertising, about the same, maybe more. But retail...
It is a loss leader.
Akin to Costco's $5 rotisserie chickens. Sucharita Kadali is a retail analyst at Forrester.
In all of the calculations that we have done, it is hard to envision a scenario where that traditional retail business is profitable.
Affordable products and fast shipping is likely subsidized by Amazon's other products, like AWS. But it doesn't mean Amazon is going to forget about Prime, says Santiago Galino, a professor of operations at Wharton.
The pure retail part of Amazon, I think, is there to stay because it allows them to have the infrastructure to sell other things more profitable.
For instance, every Amazon search includes ads companies have paid for to boost their position. Those ads and nearly everything outside retail need retail to work. And this is increasingly a strategy other retailers are using to diversify. Target and Wayfair have third-party selling platforms. Walmart offers financial services, healthcare, and pet insurance. Here's Bain's Cheris again.
That's always the worry, is that my competitor makes money in places that I don't, and it allows them to subsidize where they fight with me.
These days, the business of selling stuff isn't enough. I'm Kristen Schwab for Marketplace.
Marketplace Morning Report is supported by Odoo, offering software that provides building blocks for creating a custom software suite. Odoo, what businesses need.
With the Trump administration's embrace of fossil fuel-powered energy, the big oil companies are coming off surprisingly mixed sales and profit reports. BP shares are up about 2% this morning in London with strong profits, but ExxonMobil and Chevron disappointed investors. Marketplace's Elizabeth Troval reports.
For those in the business of bringing oil out of the ground, Tom Kloza with consulting firm Turner Mason and Company says
There's a lot of disappointment out there, mostly in the price of crude oil.
The problem? OPEC Plus continues to ramp up production. Morningstar's Alan Good.
That's tipping the market into a little bit of oversupply.
That's pushed down prices and company earnings. But Good says big oil has been strategic, with layoffs, deploying technology, and selling off costly assets, which means
they have a set level of earnings at a certain oil price today is higher than what they may have generated 5 or 10 years ago.
Doing more even at a lower oil price. As for U.S. operations, Matthew Bernstein with Rystad Energy says the current price per barrel in the mid-60s may not be ideal for these big companies.
But it doesn't break the model like prices in the 50s or low 50s would.
Though smaller oil companies are not quite as well positioned.
It really becomes a question of frankly, survival for a lot of these companies where their inventory is more limited compared to the largest players.
We'll likely see cost cutting and consolidation. That may not be great news if you work in the Permian Basin. But as for the rest of us, Tom Kloza again.
The good news for consumers is we're going to have cheap gasoline.
He expects a stretch of lower prices at the pump. I'm Elizabeth Trovall for Marketplace.
A big beneficiary when the Trump people cut federal workers is a company that makes the data processing and artificial intelligence to replace those humans. Stock in Palantir, a huge government contractor, reported its first quarter ever where sales reached $1 billion. The company's CEO is on CNBC saying AI can even help him cut hundreds of his own staff. At a time, he hopes to increase sales tenfold. Palantir stock went up 4% yesterday and is up another 5% in pre-market trading right now. In Los Angeles, I'm David Brancaccio. It's the Marketplace Morning Report. From APM, American Public Media.